Today, we are going to decipher market signals by deep diving into the recent market trends. Hi, guys, this is Shilpa Raidas, and we welcome you, Jay. We have Jay Vora with us, as always. And everyone is welcome to Midweek with Indiacharts. So, Jay, how are you doing?
I'm fine. How are you?
I'm doing very good, Jay. Thank you so much. So, Jay, in the last 2 days, the US indices has seen a good correction. Also, we have seen the dollar index, gold, and the bond yields all rising higher, which is not very common. So, what do you think we can make of this, Jay?
Yeah. So, I mean, there have been few puzzling moves that have been happening in the market. We had sort of discussed this in length in the, weekend with India charts, which we had
Okay.
recorded this evening.
Mhm.
But nevertheless, so we'll come to that. But see, one thing, what is happening in US especially is that the rates seems to be, going to remain higher for longer.
Mhm.
The reason being that we saw the the manufacturing PMI data yesterday, and it has now come back above 50, I guess. And whenever the reading is above 50, that means that means that economy particularly is getting into the expansionary phase. Okay, whenever the reading is below 50, that means the economy is actually contracting. So for
Okay.
a while, the PMI data was, the manufacturing PMI was below 50,
Mhm.
and this time around it has come above 50. On top of that, there has been either stable or minor uptick in the PPI, CPI data as well. Okay,
Mhm.
CPI, core CPI, and all. So,
Mhm.
broadly, the point is that the inflation is now sort of either plateaued or it is slightly inching higher. That is also because we have seen Brent crude also rising higher lately. So even that will have some bit of impact. But yes, broadly what we are seeing is that again, the economic activity seems to be picking up. Okay, the jobs data is also more or less okay, and we are seeing inflation also either at that 2.53 level stable, or it is slightly inching higher. Now these all things will slightly make these all things will make Fed uncomfortable a bit. And that is why I think at the start of this year, people were expecting somewhere around 6 rate cuts. That
Mhm.
was moderated to 4 rate cuts, and now people are penciling in 3 rate cuts for the year. So I think if we see the commodity rally which we have been seeing lately, then there can be some negative surprises as well, right? So when we look at the US indices, I'll quickly share my
Mhm.
screen. So over here, see what is happening is that if you see the Indian market, okay, Indian market has been in this range for some time, but
Yeah.
internally we have seen some meaningful correction as well within the stocks. I think US is sort of going through a similar phase. So it is more upward rising over here, but I think if the 20-day breaks, there can be some correction that can be till the 40-day exponential average.
Mhm.
Also, because when you see the RMI cycle, okay, it has not really come back towards the zero line. It has been above the zero line for quite a while now. So I think there could be some correction that could be due over there, especially if the S&P 500 breaks below the 20-day average. Okay. Now, so now we will come to the point where how will the Indian markets react and so on. But
Mhm.
so far, what I guess is that in the US indices, it is looking a bit toppish, and there can be some bit of correction. Now, add to that, if you see, yields have risen higher. Post that data, we had seen the uptick in yields as well, and that can also be can be a trigger, you can say, for a correction. But if you see the relation broadly, usually you would see equities rallying higher when the bond yield goes down, right? And
Right.
if the bond start rising higher, I mean, we see a correction in the equity. I mean, that is sort of the correlation. In fact, even for dollar and gold, if the dollar index is rising, gold will correct and vice versa, right?
Mhm.
But in the past few days, what was happening was that all the four things were, moving in tandem, which is, something very crazy. And I was looking at, how especially dollar and gold behaves. So you can see that dollar over here, it had sort of bottomed out in, I think, 2018.
Mhm.
Okay. And just remember what I told you just a while back, that when the dollar index rises higher, typically you would see gold underperforming or going down. Okay.
Okay.
But in this phase, so what happened was that dollar index bottomed out in early 2018. And if you see gold, okay, so gold bottomed out in, so gold had bottomed out over here, but then it was seeing a sideways consolidation. And from 2018 in August, it started picking up. So over
Mhm.
here, gold saw a correction, but then it saw a pickup. And then what happened was that gold rose higher and even the dollar index rose higher. It was only after 2020 when the dollar index corrected significantly, like you see over here. So this was the top in the dollar index in 2020, and after that we have seen a significant correction in dollar index. So what I mean to say is that, see, sometimes there can be disconnect for a while, but this disconnects cannot last forever. Okay, I mean, eventually these will play out. So
Mhm.
similarly, right now what we are seeing is a disconnect between gold, okay, which gold has been rising higher. And if you see the dollar index also broadly, it has also, more or less has been rising higher, or it has been sideways. Okay. So if the gold rally is true, then dollar index will eventually come down. Okay. But like I told you, I mean, in the short term or maybe for a few months as well, there can be disconnect. So especially in 2018-19, it was almost for, I think, 1.5 year or so, there was this disconnect. So that can entirely happen.
Mhm.
So what I am actually expecting is that if the dollar index does sustain above this 105 sort of levels, then we can see an up move towards 108, 109. I mean, that is entirely possible and that cannot be ruled out. uh, the point at which, I'll feel that the dollar index can head lower is possibly when it breaks this low, which is 108, because
Okay.
this we have discussed many times that this is actually 61.8% of the previous rise. So
Mhm.
until that doesn't break, there will be a risk on the upside, and that is that the dollar index can rise higher to 108, 109 kind of level. But having said that, when we look at gold and silver chart, okay, these are looking very interesting. I mean, we had spoken about this few times back as well, and there have been multiple failures also at the top. So honestly, over here also, I was thinking that it will break out, but again, it pulled back. Okay. Now this time we are seeing gold sustaining at higher levels. Okay.
Mhm.
Now because we have seen such runaway rally, there can be cases where, we end up seeing pullbacks. But now if the rally in gold is real, then the averages will not break. Okay. I mean, there will be periodic pullbacks from time to time, but these weekly averages will not break. Okay. And in fact, even silver, that now, I mean, silver has been, underperforming gold for quite a while now. But, this week, silver has made a good comeback, and it is trying to break out from this entire triangular structure. Okay. So if that happens, now in Elliott wave, we can see that from this low, we have seen a 5 wave rise on the monthly chart. The
Right.
only issue over here is that on the daily chart, the third wave is a mess over here. I mean,
Mhm.
we can think of it as a 5 wave rise, because this can be 1, 2, 1, 2, 3, 4, 5, 4, and 5 over here. I mean, we can do that, but it is not a very nice looking, 5 wave rise. But nevertheless, I mean, because we are seeing it on the monthly chart as well as a 5-wave rise. So ideally, what will happen is that if this fifth wave has to continue for a long time, okay, then I don't expect the 20-day to break on the downside. If at all the 20 breaks on the downside, then yes, we can get some meaningful correction, probably back to wave 4 as well. But if I mean, if this 5-wave rise that we are seeing, that is for real, then I think there is also a good chance that silver can actually bottom out over here, and we can see a big move in silver as well from a medium term perspective. Okay. Now, like I told you, there can be pullbacks in between, but I mean, if you see this medium term resistance line also, that has been broken. So over here, we have seen a lot of whipsaws over here, but now finally that seems to be breaking out. Uh, Now, what I am actually looking out for in terms of pattern is, this is like an inverse HNS that seems to be, forming in silver. So, next few weeks and next few months should be very exciting for silver. So let's see what happens. Now, again, in this case, what dollar does would be very important. I mean, if gold and dollar and silver, these all rise in tandem, and then I would think that this is more like a euphoric market that we are seeing. And basically, even if equity rallies in this phase, then this will be actually sign of a euphoric market where all the fundamentals are going for a toss, and one way everything is rising higher. So that should not happen ideally. But if it happens, then that will be a big red flag. Uh, so yeah, I mean, broadly, what I'm expecting is that gold, silver should do well going forward. So there can be some pullbacks that we can see. That is purely because when we look at the daily sentiment indicator, okay, which sort of helps you to understand the market mood. So over here, you can see that for gold and silver, the reading is 88. So typically, when it comes to 90, that's where you can say that people are excessively bullish on that particular security or index or whatever, and typically we see some sort of pause or a pullback after that. So that can entirely happen. One needs to be open for that. But I think the weekly averages, the daily averages, these will now act as a strong support level on the downside. And as and when you see RMI completing the cycle and giving a bullish crossover, that would be more of an indication of next leg of the up move that would be starting. So gold, silver looks exciting. Dollar we need to watch out for. In US indices, there can be furthermore correction that can happen if the 20-day breaks.
Wonderful. That was very comprehensive, Jay. Thank you so much. Pretty much gave us a very satisfactory answer to our question. Moving on to the next query with you, Jay. See, the Nifty index retested a high of 22526 recently, right? But it has not broken above it so far. Can we see a correction in the coming days if 22526 is not broken on the upside? And Jay, what are the sentiment indicators on strike telling us as well?
Right. So I think, one big shift that we have made in terms of the outlook is that this entire, earlier we were thinking that basically this was wave 1, this was wave 2, wave 3, wave 4, and this is wave 5 that is ending. And after that, we have seen a 5-wave rise, right? But ideally, I mean, if this 5-wave rise was true, then the high wouldn't have been broken even by 1 point, right?
Right.
But we have seen that the high breaking on the upside. Now, that is making us feel that this entire rise is, so this was wave 1, this was wave 2. Over here, we have seen wave 3, and this was an ABC correction, or we can say a running correction. Okay. So ideally, we would see a 38.2% kind of retracement in wave 4. But over here, what Nifty has done is just 23.6%. So if we measure it in terms of Fibonacci retracement, you can see that it has just done 23.6%. Okay. And in
Yeah.
fact, rather than price-wise correction, we have actually seen more of a time-wise correction. Now, when we look at it in the hindsight, and then, when we try to match it with the sentiment indicators as well, like you see the breadth over here. So it was basically when this was a major bottom, the breadth had come toward this point, and then we saw a rally over here. Okay. So what we were thinking, that this is wave 4 and 5, and then this was this correction, which was the first leg. So actually over here, we can see that the breadth had got very much oversold. And this was something that we have pointed out earlier as well, that the breadth was very much in the oversold zone. So we can see a bounce. Okay.
Right.
So ideally, if the bounce, I mean, if the move was just a bounce, then it wouldn't have retraced more than 61.8% of this decline. But it actually not only surpassed it, but even broke above the high of the 5-wave decline, which we were thinking. Okay. So broadly, this has become ABC now. Now, this means that wave 5 on the upside is still pending, but the only thing that is going to happen is that wave 5 is going to be shorter than wave 3, because over here you can see that this is wave 1, this is wave 2, this is wave 3, and this is wave 4. Now 3 is shorter than wave 1. Okay. So wave 5 has to be shorter than wave 3, or else wave 3 will become the shortest, and that will negate the rule. Okay. And that will lead to the entire wave count change as well. So if we go by that analysis, then what I would think is that if this is wave 3 low and wave 3 high and wave 4 low, so ideally Nifty should not go about 25,465 level on the upside, or else it will it will lead to a change in wave count altogether, right? So in the near term, the upside levels that can be expected would be each of these Fibonacci levels. So if say 23,074 breaks on the upside, then we can see this level, which is 23,512, and that way each of the levels will keep unfolding on the way up till the time we don't see a reversal. Okay. So that is how broadly we are thinking at this point of time. And the other reason to think of a new wave starting is because we have seen a daily RMI also giving us a bullish crossover. Okay. So this zigzagging that we have seen over here in RMI was due to wave 4 correction. But now that RMI has given us a fresh leg of has given a bullish crossover. So this would mean that the next leg of the upside should be unfolding. Now, when we look at the sentiment indicators as well, I would think that even this is sort of supportive. So earlier, what I thought was that if we are getting into this sort of correction, so we'll see this zigzagging in the breadth indicator. So, but now, we are seeing breadth rising higher very quickly. In fact, this today's data is not updated, but even if today's data would have been updated, it should inch higher significantly. In fact, even if you see the 40-day average over here, so see, even when we formed a significant bottom over here, okay, there was the 40-day advanced decline ratio had come towards this oversold zone. Now, again, we are turning back from this point. So I would imagine that now till the time wave 5 plays out, we will keep seeing this breadth broadening out. Okay. And the other thing that makes me sort of confident of wave 5 unfolding in the coming weeks and months is that the participant positioning. So see, typically what happens is that if the FIIs are long to the tune of say 60,000 to 90,000 contract, that's where a top occurs. Okay. And if they are short by say somewhere around 125 to 1,70,000 contract, 1,70,000 contract, then that marks the bottom for the Nifty index. Okay. So while this correction was unfolding, okay, ideally we would have wanted this short positioning to come back towards this zone. okay, to say that a meaningful bottom has occurred. But
Hmm.
nevertheless, I mean, it has turned around from here. So in the past also, we have seen that, such kind of turnarounds do happen. I mean, in the past as well, you can see over here, you can see over here. So, we can see, the bottom sometimes being a little higher from the oversold zone. But, now I guess that if the Nifty index breaks on the upside decisively, okay, then I would expect that this sort of range, which the FI's positioning was in the last 1 or 2 months, even that will break on the upside. And if the Nifty index rises higher, typically the FIs tend to form position in the direction of the trend. So then I would expect that the FI's positioning will actually again go back towards the 60,000 to 90,000 mark. Okay. And that would sort of be bullish for the market. If you see now, while I was trying to identify, the behavior of each of the participant, all of them are giving me this common thread that Nifty could have formed a meaningful bottom. That is
Hmm.
also because when I see the client positioning, okay, client positioning is slightly different from the FI's positioning. So, I mean, FIs are usually, very much long when the market is toppish. Okay. I
Hmm.
mean, their long reaches overbought zone when the market is at top.
Hmm.
But in case of clients, it is the other way around. I mean, when the market is at the bottom, that's where their positioning on the bullish side is maximum.
Hmm.
Okay. And when the markets are actually, topping out, that's where they will be short to the maximum. Okay. So you can see over here that the client positioning had recently touched around 73,000 contracts or so. Okay. It was roughly around 73,000 contracts. And you can see from there only Nifty has bottomed and it has started to rise higher. And we are seeing reducing. So now what I would expect is that until this positioning of client doesn't come over here, okay, somewhere over here or here, that is minus 10,000. So it is minus 10,000 contract or minus. So sorry, this is actually 1, 2, 3. Yeah, so it is. So their position can actually go to minus 1 lakh to minus 4 lakh as well. Okay.
Okay.
So until that doesn't happen, I think we have a good runway on the upside. So wait, sorry, let me once again confirm the number. So it is, yeah, it is 1 lakh over here. So it is 2 lakh 92, 3 lakh 63, right? So 1 lakh to 4 lakh, okay, until they don't go short to that point of time.
Hmm.
Okay, till then we can say that the up move in the markets can continue. And this is what, we just spoke a while back, that the FIs are also indicating.
Hmm.
Even their positioning should go towards this extreme. And in fact, when you see the DIIs as well, so these three are the major participants in the market. Okay. So over here as well, they are in between, but you can see over here that they had come towards this, first oversold line.
Hmm.
And this is where actually the market bottom occurred. And from there, we have seen the up move. Now, again, I would expect that once the Nifty index rises higher, okay, so that's where their positioning will actually come to the extreme. So, in fact, sorry, my bad. Actually, whenever their positioning it comes towards this first red line, that is where actually the tops occur. Okay. So because this is very close, so one may get confused. That's
Hmm.
why I'm using this crossovers as well. So like you can see over here, that here the top has occurred and their positioning was at the bottom. Okay. Over here as well, I mean it was at the bottom, but we saw some correction over here. Now, typically, when their positioning reaches an extreme,
Hmm.
okay, like you see over here, that's where it is bottom. So I would expect that even the positioning of the DIs will actually go toward this point. Okay, that's where you can say that a major top could be occur, because like I told you over here, there was Nifty topping out. and you could see the DII's positioning bottoming out as well. So I would expect that this, when it comes to the DII's positioning, which is say somewhere around -40 or -60 or so, that would be the point actually when you need to be be a little worried, because even when 2021 top was occurring, okay, you would see DIIs consistently shorting the index future. So yeah, so broadly that's how we are poised, and DIIs are in the middle right now. But when we look at the FI's data and the DII's data, that sort of gives us some confirmation that Nifty could be heading higher. And in fact, the few of the indicators which we were looking at last time, I mean, the 20-day being oversold, that seems to be rebounding. Even 50-day, that seems to be rebounding. And until these doesn't come towards the extreme end, okay, say till 80 or 90% or so. So that's where I think, we'll have some bouts of corrections in between. Okay, we'll have something like this happening over here as well. But yes, I mean, till the time it doesn't reaches an extreme, or it doesn't end up forming, say, negative divergence like we had seen over here, till then we would believe that the bullish structure in the market can continue. And in fact, when we look at the small and the mid cap index as well, okay, that has reclaimed back the high. So honestly, if the top would have been occurred, then they wouldn't have reclaimed back the highs. But given that they are reclaiming back the highs, so that's where we are thinking that from this bottom, the rise is 1, 2, 3, 4, and fifth wave should unfold. But eventually, fifth wave will be shorter than wave 3. Okay, because wave 3 is shorter than wave 1. So, as per the Elliott wave rule, wave 3 cannot be the shortest. So that's where I am anticipating that wave 5 will be the shortest. Now, say if wave 5 extend and it becomes, I mean, greater than this move, then the entire wave count will change, and that will become actually super bullish. So it's better right now to go with a conservative case, okay, which is like wave 5 becoming shorter than wave 3, and wait for the reversal to happen. Okay, maybe before reversal, you might also see the sentiment indicators which I showed you, getting towards the extreme points. Okay, so that will be sort of a warning, I mean, red flag to you. But yes, I mean, until we don't see those overbought readings kicking in once again, I mean, we can say that there can be some pullbacks in between, but broadly, the Nifty index should be heading higher. So maybe, any meaningful declines will actually end up being, say a buy on dips kind of market. So that is what I'm anticipating from the next for the next few weeks, and probably this can extend till either budget, I mean till the election or the budget. So after budget, we may need to have a fresh look. But yes, I think for the next 2 to 3 months or so, there can be some bullishness that we can expect in the market.
Okay, wonderful. Thank you so much for that, Jay. That brought us a lot of clarity. Of course, we'll be connecting next week and we'll be taking more updates and clarity from you. For those of you who haven't checked out Strike as yet, I'll be leaving a link down on the description. So Strike is currently giving a 7-day free trial. This is your opportunity to have a look at all the tools, our indicators, our proprietary indicator at Strike. And Jay will personally be answering the questions to your questions on this video. If you have any, we encourage you to please ask your questions on the midweek video. Okay. And I would also urge you to join Strike on Twitter and YouTube. I'll be leaving a link down below. We had a lovely session, Jay. Thank you very much for that. I'm looking forward to see you next week. Take care of yourself. Yeah. Thank you. Bye-bye.